All right, ladies and gentlemen, we are back. We are alive. So welcome to our presentation on the compelling topic of investing in Meta stock. Today we will just ponder about whether it's time to sell Meta stock, as it's also right now is dropping heavily, or maybe is it an opportunity to buy. So Meta is the parent company of Facebook and Instagram, located at the forefront of innovation and change, making an intriguing opportunity for investors. But is it the time to buy it right now? Maybe better sit on the sidelines waiting for better times to come. So I'm right now switching you to Meta stock after earnings presentation, and we will delve into the world of Meta stock and explore the reasons, strategies, and potential benefits of including it in our investment portfolio. We'll scratch through also the sentiment and technicals, so there will be everything you need to know in order to get the best investment decision, or maybe trading for short. So let's embark on this investment journey together, and we are right now jumping into a little bit of fundamentals, but there won't be much of it, so no worries. As a reminder, we are live, so if you just have joined, you may just pop the questions at the chat going beneath the video. So right here you can find that income statement, octopus, that what I call. We can find that Meta company is taking its revenue out of the advertising, with that has been really widening. The sector been widened 24% year over year. So it's absolutely outstanding outcome. And another things that are also monstrous or becoming monstrous is this more metaverse type of a facilities that Reality Labs is included in. So Meta is getting more into this metaverse type of a industry, and right now, even though the largest revenue distribution is comprised out of the Facebook, Instagram, WhatsApp, and Messenger, so the social media type of platforms. Right now we can find that Meta is trying to make a turn and build another, I would say, the parallel universe of metaverse. So that may even put the Meta at the position where the Google sits and Microsoft. Indeed. So Meta in July 2023 has made its artificial intelligence model that was Llama 2. So it's also about to compete on the background of this ChatGPT's type of a tool. So Meta didn't impose charges for access or usage, opting for an open source model to gather feedback and identify areas for improvement. So right now they are testing many of things, and out of this also many revelations will come out. So I will get you updated on Wall Street Station challenge. So if you haven't subscribed yet, you may consider it right now. All right, so we are jumping to some of the updates lately. One of the sectors that has boosted the stock kind of significantly was this those glasses, this metaverse glasses that allow the users to just put them on your face and then import photos and videos to your phone via their local Wi-Fi network, and make it convenient for users to access and share their content. So it not only recording but also have a such of a compatibility with other type of tools. So that's making a burning type of a technology that may ripple through every kind of industry when I would say the workers or the customers will be just facilitated with and provided with these glasses. They may record and also study the things in the real time via the connection with other type of I would say the parallel universe of this metaverse type of structure. So right now there are, however, some of the limitations due to usage this glasses, so it's still in this very infant type of stage of development. There is a video duration limit, so the glasses have a maximum video duration of 1 minute, and it's optimized for storage and importing, but right now the limitation aligns with the focus on creating content for platforms like Reels, TikTok and YouTube Shorts. There also might be some of the things related to privacy concerns about recording with smart glasses. So the regulations may eventually may step in and regulate this sector. Therefore, it may make it a little bit longer for those glasses to enter the market and widespread as a viral, but it's inevitable anyway, in my view. So that was the thing I wanted to highlight right now. There are also other legal concerns around the Meta company overall, so let's dive a little bit into it. So there were legal challenges against Meta over teen mental health, and right now there's a wave of legal challenges hitting the company. The result may be this investigation that already started off in 2021, prompted by Facebook whistleblower revelations. So right now there are many documents suggesting that Meta was aware of its product's negative impact on young people's mental health, especially girls. So there are some of the legal type of things going in the background. However, Meta right now is responding by stating its commitment to teen safety and its efforts to provide tools for users. So there are also some of the solutions they may eventually push through those concerns and eventually to fade them away. So in a broader context, these legal challenges are part of a larger effort by states and the federal government to regulate tech giants like Meta and Google. Right now, it may eventually cut off some of the income out of the ads, but I do find that in the long run, the position of Meta is unthreatened, and even though those pressure may put them a little bit downward in profitability, it may be just a single shockwave rather than just something that may push down the stock and making it meandering along in the lower type of profitability for the long time. So the need for adaptability right now is the very crucial one for the stock, but I do find that it won't be concerning in the long run. So what about earnings? We are right now after quarter three earnings report, and maybe I will just change it to laser point. It may be a little bit more visible. So right now we are in this positive building up trajectory of upward tendency. So it means that Meta Platforms in revenue is rising. Free cash flow also is giving us a boost. So it's absolutely the thing that pushing us into the position where we haven't been in 2022. Right now we are once again at this upward upward momentum type of a trajectory, and with net income for the quarter rising by 164% to 11.6 billion, surpassing forecast. Meta is becoming the one of the most type of a the fastest growing company in United States. So one of the concern is that despite these positive results, chief financial officer suddenly warned of increased volatility at the beginning of the quarter. Meta didn't have significant direct revenue exposure to the Middle East, however, but observed reduced advertising spending, possibly related to the latest conflict. It overall may weigh down on the stock valuation in this few next months. Also, there are some concerns about also having more headwinds in the US economy overall. So right now, even though the whole Meta and Mark Zuckerberg continuing focus on artificial intelligence and planning also to prioritize investments in 2024 in the first quarter of next year, and also maybe at the end of this year, the position of a stock may be a little bit under a threat of this limiting type of a short-term improved revenue. So that's what I wanted to shed light on. And are there any cracks inside of the income statement right now? What I wanted just to point out is this price to sales ratio. So right now the stock has got a little bit overvalued by some cases, and in the short medium term type of a horizon, it may eventually discourage investors from buying it. So that's one of the things I want to find out. Daily active people and total revenue is increasing, but this latest growth of a stock valuation may be unsustainable in this short medium term type of scope. In terms of other elements of income statement, that's cash from investing activities. That's one that is dropping, maybe due to the latest headwinds, and also ad revenue being shaken out of the latest legal battles. But even though the Meta stock has been thrown in at the deep ends due to what's it going through, it's still this position out of the data in the this, I would say this many upgrades out of the revenue type of statements seems nothing very close to sending a very real shock waves. In terms of projections right now, let's find out. So those are projections of revenue and earnings for 2023 and 2024. So it's about to rebound right now after this kind of plateauing 2022. So we are getting out of this doldrums. In terms of the 12-month forecast, we are still having a room to thrive. However, the shake in the revenue in 2024 seems visible right at those elements that I just wanted to point out, is that the analysts are finding the stock to trade it in the short term a bit lower. Right now the macro seems mostly favorable for technology stocks, as we have gross domestic product projected that have grown at an annual rate of 4.9% last quarter. So it's more than double the pace in the prior period, according to latest surveys. So this is the fastest pace since the end of 2021, and when the economy was shaken of the effects of the pandemic. So right now we are definitely in this recovery, entering maybe even this high performance type of a cycle. So it means that right now those companies of technological stocks should be unshaken. However, they already rose so much, so the kind of a correction may be inevitable. Also, when it comes to directive short-term bias, I wanted just to point out this finding. That's the chart showing that stocks decline leading into a Fed pause normally, and then, however, rarely during the pause. So this cycle has reversed this historic trend, and it means that right now, as we are expecting the pause to come over somewhere within a couple months yet, it may eventually take or get a downbeat in a fourth and maybe first quarter of next year. So when it comes to this finding, it may eventually come true. So we may have a little bit more chill when it comes to the overfilled most on US stock market. When it comes to inflation and geopolitical risks, that may be also something that may bring this ball and chain effect, and for those countries that don't have well anchored inflation expectations, the new round of high energy prices out of the geopolitical type of a conflict may eventually weigh negatively on those gauges. So when it comes to overbought conditions and the stock overall, what's in it for us traders and investors? Just find out what's on Meta right here on a 4-hour chart. Or 4-hour chart, we can find it. We are trying to find a bottom right at the level of 274, but right now on daily it doesn't look very well. It looks like we have built on the line chart, we have built a double top formation that usually sends us somewhere, but you know that it's a little bit too to admit it, but it gives a hint for double top formation, as the double top formation will eventually materialize after getting through this close of a candle. So if we just get cross through 273, it will just open us another wave of sell-off that may eventually end up right at the levels of 220. So it's around 20% of drawdown back from this trough. So we are right now at the very pesky type of a price action. We are trying to find a bottom, and if the bulls won't just turn up at those valuations, we may eventually get the stock into trouble. Analysts are finding the stock to trade within the areas of 220 to 40 due to lowering revenue in the next quarter. So such of a correction with Fibonacci extension at around, let me just put it. So Fibonacci extension right now has found us at 0.78.6, so it's crucial level, and another support may be seen right at the 0.5 around 230-ish. For the short term, however, I'm still a lack of position. However, crossing through 276, 273 will be the one of the hints that a Meta stock will be the supposedly great stock to sell. So on daily it looks like this. However, you may just pop your thoughts on the chat right now, so I will just get back to this as soon as possible. In terms of Fear and Greed index, right now we are in a kind of good position as we are right now below 50, so it's normally where you wanna buy the stocks. However, right now we need a higher high, higher low structure. Right now we are building a lower high, so it means it still gives us a hint that a longer correction on the broader market may be imminent. All right, so we are through this, so let's get to option chain. So what the market is telling us, so majority of market participants still find an occasion at current valuation. That should be here. So you can find right there that puts, the largest puts are sitting right at the 290-ish. However, the largest calls are sitting right at 315. So it looks like a kind of dispersion, but when it comes to maximum pain for the stock, it sits around 300 though. So if the company, as we are right now, getting below 300, so it means that right now the price should get to around $300 by the end of a week. So it looks like we should revolve around this level this day and by Friday. However, in the next week, it depends much on price action and where we will eventually land up. So for this week, I don't find anything much of a concern. Options chain also stating that we should be ready to hang around somewhere within this area. However, this 200 EMA cross on 4 hour chart has been right now broken, so it means that the chart is getting more weak with this current session. So the next supposed support will be at 276 and then 273. If we just break down lower, it would mean for options chain that more panic will be turned on, but before it happens, we need a little bit more power to build it up. So right now I'm still a bullish type of a positioning, but I'm still kind of a sentiment feeling still, and it's more skewed to the upside. However, I'm still very cautious when it comes to observing Meta and supposedly having a chance to open the sell position along the way. And we are right now wrapping up. So Meta, the parent company of Facebook and Instagram, has provided an outlook for its financial performance. That revenue expectations for Q4 is exceeding those expectations of analysts. So it brings a dispersion between what the market sees and what the company sees. Therefore, we are right now in this kind of a correction moods when those valuation is being tested by this liquidity sitting underneath the previous support levels. So Q4 by economists is perceived as the one that may be weighing down the stock, but the governance of the company are still finding this one to thrive, even though this legal concerns and also ads revenue been cut off to some extent. Also, we do expect that Metaverse Lab may bring some losses with the decrease in revenue and continue to experience other type of headwinds. So we are still in the environment of the economy where it's I would say lack of risk appetite. So this type of a revolutionary type of a findings and possibilities of Meta may not eventually right now find its right place. Therefore, we need to hang on for those headwinds to fade. That's it in today's episode. Thank you very much for watching. If you have enjoyed, you may hit this like button, and we are seeing each other at the next episode. So have a great day wherever